What's up, traders? Happy Friday once again to you. Man, we're almost just where we left off last Friday, where I was looking for market to pull off of this support 561 SPY and just didn't quite do it. I've got asked a lot this week. What am I doing? I'm still waiting patiently, but let's talk about that a little bit. Also want to kind of follow up on a little bit of Bitcoin drama from this week, the whale that everyone's talking about at the beginning of the week. That was an interesting little turn of events. I got some thoughts about that, and we're also going to look at a question I got about. People have noticed in charts I've been sharing that I've been putting EMAs. Does that mean I'm going to start using them now? I've been experimenting with it because some of my friends have been using it to great effect, and there's some takeaways here. But I also want to kind of put those together with volume profile levels and teach a little bit based on futures and what happened today and this week. So that's coming up. Let's let people filter in, and I look forward to talking to you guys. We'll start in just a second. What do we want to do? All right. All right. Once again, good to see you guys here. Happy Friday. All right. What sectors are my most bullish? Ah, man. Yeah, so there has been a bit of a sector reversion as tech has started to kind of come back. But I still, if you go back and you look, it's a lot of the consumer staples that have been bullish on for this year. Dollar General, Kroger, Hershey's, Mondelez. These consumer staples are still good and up on the year. Whereas if we were just do a quick look at tech, I think we're going to see what we already know. Let's just do a quick look on the sectors. People keep asking me. I got questions this week. Once again, when can I buy Palantir? Should I get some Tesla? Tesla's been. We're going to talk about Tesla separately, but what should we do about those kind of tech stocks? Because I think a lot of people are looking at this as opportunity, as you should. Things are down. That's probably the better time to buy it than when they're up, and everyone's telling you that they're just amazing and going to the moon. But are they really at enough of a discount? Okay, so the last 50 days. Let's do trading days. So that's going to be how many about weeks? That's about 5 weeks. That's fine. Or 10 weeks rather. Oh, that's a little too much. We're not 10. Yeah, we're 10 weeks in the year. We're almost at the end of the quarter. We got one more week. Wow. Like this year, I know when you get older, it gets faster and faster. But wow. Tech is still down. I mean, it's just come back a lot. But tech and discretionary, the two things that lead at the bottom of a market, lead you out of a market bottom, are just not. Let's look at the last 5 days though. Last 5 days, still is energy has been big. Industrials, consumer staples have taken a little bit of a drawback. But yeah, energy big. I need to look at what that is because that's what actually is leading. But if we look at the model, still it's not telling us by sector rotation that we're going to see those things start leading yet. The next ones we would expect to lead in the sector rotation model would be consumer staples, healthcare, and utilities, still as the market begins to roll over. And so let's talk about that for a second, because when we left each other last week, if you're watching, let's go back to last Friday, and that was about here. Okay, we're looking at SPY. We could use SPX too, but the key level is. We're going to talk about moving averages here in a little bit as well, because people have been asking me why I don't have moving averages on my chart. And I'm taking a little bit of peer pressure and starting to look at those, but we'll talk about it. So this level right here is the 50% retracement from the August of last year low. Great buying opportunity that you would have in a bull market, to the all-time high that it set in February on the market as a whole, S&P 500, and 561 SPY is that level. If we go back another week and we look at Friday from 2 weeks ago, that was what I was looking at for me, for my own, like, okay, got money for your IRA. What are you going to deploy it? I'm going to wait for the typical, you get 2 to 3, 5 to 10% pullbacks in any given year, statistically. And so the 10%, the maximum of that, which I'm going to measure from the top, is at about 551. But, of course, we hit 561, boom, and then came down and touched that 10% and a little bit more. And then we came back up, and now it's in kind of a situation where is that going to stay as a support? In other words, if we look at the weekly, is it going to hold this level or not? Okay. And so we have 1 week of it holding, and then we're going to go into the next week, which is this week. It's going to fight that level, still holding us as support, and yes, holds it, closed up above it just on Friday, but it still is doing a little bit of a test. Call me contrarian, but I would like for the market to show me a little bit more life. However, I do think that that which it did today on SPY, it's still bullish. I mean, we're holding this level right here, the 561. That's what you want to see for this thing to start going up, but not yet. So we'll see. I'm not particularly interested in tech. Someone asked me about Palantir this week. I still am looking for more. I want more. If you in any tech stock, doesn't matter what it is, if you just are patient enough, this is on the weekly of Palantir. If you're patient enough, you'll get a really deep discount on any tech stock. I mean, look at Amazon. Amazon, the trade of the century, as I called it a few years ago, on the monthly, it came back to a full 50% retracement of its 2-decade high to low. That was back in early 2023. I tried at the time, hey, it's Amazon. Like your girlfriend, your wife, or you, if you're no, there's no women that watch me. If you know a significant other, she spends a lot of money on Amazon. You probably do too, but it's not going to go out of business. And so to be able to pick up something at a 20 or 50% retracement, that's just amazing. And it's a tech company, and that was essentially just to kind of put a number on it. That was a 54% pullback. 54, it got cut in half. Amazon, you got it half off. You got it half off if you were just patient. So anytime we talk about a tech stock, whether it's Palantir or NVIDIA, oh man, everybody has wanted to buy NVIDIA this year, have they not? And so NVIDIA just in 2021, a few years ago, had a 68% pullback. So what kind of a discount have we gotten at this point right here? A measly 25%, 23%. What was the max? Did it even get 30? 31%? It's not enough. That is not, you must ask more for tech stocks. You must ask more of a pullback for tech stocks. You must. Hashtag not financial advice. So anyway, if you have stuff to look at, always more than welcome to put in the chat. That's why I'm here. I love to source ideas and talk about them. But yeah, what am I looking for as far as SPY goes? It's holding. I mean, I can't say this thing is bearish. It's right there at that level. But let's see going into this next week if we can start to get a little bit of life, get above these highs that we set this week, 572-ish. If we're looking on the futures, then that is going to be, just the highs from last week. We got to break them. We got to break them next week. Who knows? But if we bring up Ichimoku and we do a SPY or we do the ES futures, and we look at it from the trending philosophy of the Ichimoku cloud, as you know, one of the things that I look at is the daily Ichimoku cloud and how it's being contained by the cloud, the trend. And we have gone above the cloud since November of 2023. And then it's been very good about never actually breaking to the downside until now. Now, technically, it's still in an established confirmed bear trend. If we go up a level to the weekly and do a comparison, it doesn't look that bad. But again, we've been in this bull trend since, even further back, June of 2023. It's been going on a long time, 2 years. Can go on as long as it wants to, but you're starting to see an actual pullback into potentially the cloud itself on the weekly. And so I'm more interested in seeing a juicier pullback than this. And so if you bought stocks you like now, that's fine. But now you got to wait. And it's just not moving off this level very quickly. This is not the kind of, just look at some of these pullbacks that we've had, back in August of 2024 or September 2024. April 2020, last year's, or even earlier this year in January, like these big, dips, like buy the dip kind of mentality, they usually have some pretty quick pullbacks. And that goes to that whole thing about time in the market is better than timing the market. And then what they do is they cite that statistic that the best returns come the days after a major correction. And it's moving up, but it's being kind of sluggish. It's kind of my spidey senses giving me a little bit of caution here, so we'll see. Let's check on what the VIX ended up this week. VIX is getting back down, and so that is a bullish scenario. We do see that volatility is decreasing. Down, down, down it goes. So, all right, chat's got some things going on. Let's see. What's up? May not be available for live stream. That's fine. And enjoy your prayer. We'll look at those. We'll look at CELH, Ulta, and MU. Yeah, we'll take a look at those. FDX, sure. Well, let's just look at them right now. Let me knock those out because I'll talk about my. I thought the Bitcoin whale story from this week was kind of interesting. I think there are some takeaways from that. So we'll look at that in just a second. Let's look at these. Let's knock these out. CELH, Celsius. That is that the drink company? Wow. So that was a big story last year. I remember looking at that because it's just amazing to me how valuable sugar water is. I mean, Monster energy drink is another one, which, so is that, yeah, Monster beverage. It's kind of started to hang out a little bit, but that's still a very, very valuable company, Monster energy drink. I think Coca-Cola owns a lot of them right now. Speaking of Speaking of sugar water, or fake sugar water, Coca-Cola still staying pretty bullish, consumer staple. But Celsius, all right, that's what we're talking about. But I wanted to kind of mention, like, Monster is going to be the main competitor for Celsius. And then you're going to have Coca-Cola, which is kind of the staple. So what is it doing relative? Well, it looks cheaper, that's for sure. But, man, that is one fall off. Now, I bet if I were to volume profile this consolidation zone right here, let's just do a full one going all the way back so we can be encompassing all the way up to this run up. No, actually. The level where there was the most volume is actually all the way down here. There's a close second right above it, but that's going to be at about 1877, and then the one below that is 2126, which it looks like it might have pinged. But you do have supports down there. It's definitely in what I call the valley of risk, and this is when I talk about the valley of risk. It's basically this: you have a major trend, okay, and then you want this thing to come down to and hold your 50%, which it did there. There's a weekly, held it, got below it, and then it goes into this. And this is a very bad situation for you as an investor to be in, because you never know when it's going to stop. That's basically what Tesla is in right now. Tesla having found support at about 218. Again, a volume profile level really needs to hold that. So far it has, but again, down it goes. But CLEH, I haven't looked at this in a while. It is a classic example of the value of risk, where once it breaks its 50%, you kind of want to really consider, do you want to hold this thing all the way down? Let's look on the daily. It is starting to break up on a daily trend. I kind of like it for that. Yeah, you have reasons. You have reasons to say that this thing may have found a bottom. So I do think that you can probably put together a risk-adjusted trade here, because you know when you're wrong. In other words, if you get down in here, if you get down to the 18, which is still a pretty big drop now, because you'd have to take it as a breakout. But then you're just like, okay, this thing's dead. But you can possibly get it back up to, from the top to the bottom here. Let me clean myself up. Let me draw up the trade for you, because if I kind of like it, I'll draw up what I would try to take it as, and that would be as a breakout. And so your initial target, let's just say you long it here, it's going to be up here. Then you don't want to lose that low. Probably that swing low would be better, and you can pull yourself about a 2.5, risk reward. That looks pretty good. That would be a pretty good breakout, I would think, actually. So that's how it's structured. Would I take that? I like a different set of conditions. But if you were going to take that as a breakout, you need a structure like this. You could give yourself a little bit down to the low, but I don't think you really need that. It really should. You should really bottom out here. That should be your bottom, and then it should go from here. Otherwise, you're going to be in a little bit of a situation. So you want stuff to just go. You want it to immediately make you money. Those are the best. Those are the best. It's fine to be uncomfortable in the first couple of days, but you don't want to be uncomfortable for like 2 years, like Pfizer. So yeah, don't let it become Pfizer. That's just annoying. So let's see what else you got on the list. Ulta. We're getting into that Becky index stuff. I don't know. There's a lot of retail. Like here I am spouting the bearish narratives, but there's a lot of retail that's going out of business. Again, it goes back to Amazon. Like, I don't know. I'm not female. I don't shop at beauty products, so I can't give you any kind of fundamentals on it. I think I like what you're seeing here with it being at a 50% level. So from a technical standpoint on the weekly, or if we did it on the monthly, it's there. You got a good reason. Okay. Technically, I do like it holding the 349 level. That is the kind of pullback that I would generally like. So don't let my whole retail is bad get into it. That's a good level. That's a good level. It needs to hold. Hold on. That is a spike. Okay, so you know where your stop needs to be. All right. As I look at this, it's not looking too bad. So definitely have your stop below that low. You're right there at that 50%. You need to try to give yourself a, let's see where the volume profile of the high is. That's a little bit down there. That's fine. We could get ourselves a good, yeah, we get ourselves a 3-to-1 from here. Okay, I like it. It's the fact that it's kind of coming here and hanging out. That's good. That makes for a pretty good trade. 4-to-1 trade. Put your stop there. Then you can like see if it'll hold the high. That's how I'd set that up. That's good. These are not bad. These are not bad trades at all. These are not. These are. If you're bullish, if you want to buy these things, these look pretty good. These look like a proper setup. All right. Let's see. MU. I like these. I like these. I like these. These are good. These are very good. These are following my rules. This is going to be MU is going to be a little messier. I'm really kind of anti-tech this year. Kind of goes back to what I said, where it's just it's at a 50% though, isn't it? I'm just kind of biased, I guess. I really want to see like tech just die. Like I want to see everyone be like, "Oh, tech! I lost so much money in tech. I don't want to touch tech. Tech is going to zero." I want that's what I want to hear before I get bullish on tech. And too many people are just still trying to look at. But you know, it's at a level. I think also, what's AMD doing? That's something that people have brought up. Yeah, AMD. Yeah, kind of. I haven't heard anyone ask me about AMD here in a few weeks. And I think my answer was probably, hey, look, you're at that 50% back at 140, and it's not looking good in these last. And yeah, now it's broken. Yeah, see, this is what I meant at the beginning of the year. Since the beginning of the year, when people ask me about tech, I've been like, I'm not that. I don't want to. I just want to do any tech this year. This is me. If you want to do it, go for it. But I'm kind of staying away from tech this year. Maybe at the end of the year, maybe at the beginning of next year. But you need to let people stop being excited about tech. It's just kind of a sort of a contrarian vibe that I try to maintain. And that's why I've been looking at, things people aren't, which is like the consumer staples, which, yes, they pull back in the last couple of weeks. But still, versus tech, year to date, they are still leading. So, yeah. Tech led for like 2 years. Like, it had its fun. Just give it some time. All these things that you really like, all these tech companies, they'll give you a really good discount, like that Amazon 50% off discount. So, all right. What's up, Nima? Historically, we'll look at the Bitcoin here in just a second. Got a lot of stuff to talk about that. Let's see. Let me kind of knock these out so I can go on my little Bitcoin story from this week. Let's see. Yeah, these are really good. These are really good, man. FTX. Look at that 50. It's a messy chart though. It's a sort of a 50 inside of a consolidation, 227. It held it this week. Oh, that's just messy. That's just messy and scary. Run up to there. Ugh, I don't know. Who's doing better? FTX or UPS? Definitely FTX. See, man, this is a really good example of something in and holding. See how it's going through these. It's got multiple possible 50%, from the big 50% to the small 50%. It's just coming up. This is actually a great case study in what you don't want a stock to do. Breaks below its 50%, pulls up, holds it, comes down, holds it, breaks it, holds it again. Oof. So I definitely like FTX better. It's definitely holding its ground better than UPS. And I'm just looking at the two companies side by side. Earnings are coming up on June, so that's not too far. Oh, it had earnings. Okay, this was earnings. Okay. Well, tell you what. On this, let's redraw this. Let's just try to look at this. Try not to get confused by everything in the back. Let's look at the earnings of 2022, which is really what marked the last low, to the high, which was in July of 2024. It's on a daily. All right, we're at our level. We recaptured, we broke below it, we held it. It's not a spike yet because we need to get this thing up and over that 50%, that Tinkinson right there. And then maybe we'll get a spike, an actual one to form here next week as it goes above it. So what you want to do is you kind of want to watch it around here and then maybe pick it up here. Maybe it'll come up, make you a little 50% there, and then see if you can get this thing to launch. Because you know if it breaks that low, you get out. And so you can fix your risk. And yeah, that's not bad actually. That's not bad if we ignore everything before, we can just play this level, and you can fix your risk and try to shoot for that high and beyond. So that's good. And I definitely like FedEx better than I do UPS right now. UPS is just this. When I say valley of risk, let me clear that up. It is essentially just that. When you have a 50%, this goes back to what I was saying about the risk. I mean, if you took UPS here at 157 back in 2022, you were good. But once it broke that low, you did not need to be in it anymore, because then you end up with something like this. Now, not everything does that. Sometimes it fakes you out, that kind of stuff. But this happens a lot. And then this is probably one of the most capital destroying kind of patterns that I've seen. And that's why I harp on it so much is, you want to keep that 50%, because half the people that were in the trend, they're still in it. And a lot of times you'll like, just off the top of my head, my sugar water favorite company, 50%, back in October 2023, hold that level, run away from it. Now you're in a good situation. Let's get up there. So let's see. Bitcoin, where is it? I'm teasing it because let me go through these first, and then we'll start talking about it. But Bitcoin, where is it? It had a 50% from the August to here. That's 79,285. It's already tested it once, ran away. Tested it again. It's like an old man getting out of the bathwater, trying to get off that level. Where do we not need to stay in this? We'll see, man. They're trying to hold this up and save it. Man. Let me finish my things. I got a lot to say about that too. Hang on. Usually I wait till the end of the live stream, but since people came out, we'll give the people what they want. Yeah, let's see. Caterpillar. Well, that's just a good stock. That looks like some very structured buying, but I'm going to wait maybe until we get 289. 289 would be mine. That's where I would look for it. May or may not get it, but because it looks like it's just kind of holding a little bit. But here's a good example. Like there's Caterpillar. This is a great example of seeing 50% in action from the COVID low to the 2021 high. That was a great pickup there in 2022 at 166. Okay, so you take another fractal, 50% up to there. Another 50% hold, gets a little less. I bet that is still 50%. Yeah, there's another 50% there, and so up and up it goes, and now you're in like a much broader trend. We're still going to start it back from the 2022 low, and so yeah, I think actually 280. Let's make an alert for that. That's worth making an alert for is 289 Caterpillar. Definitely. Especially if you get it on some kind of like an earnings thing coming up. That's in April. It's pretty far down, but we'll see. I mean, that's just a good company. Look at that. You don't hear about these things quite as much. They're not YOLO plays, but they kind of are. I mean, what's this thing? I mean, these are the kind of things that I like. Things that just go up. Things like LLY, things like Costco. Things like Waste Management. Over years and years of time, here's another little gem that I've had for many, many years. It's a local Atlanta company. They do pest control. Orkin is Rollins. And it's just, I've had this thing since like 2009, I think. And it's just like, nobody knows what this company is. It just keeps on going up year after year. But yeah, sure, chase the tech stocks. They're more exciting. They're fun. I suppose, but this is the kind of stuff I like. All right, so Robinhood, or let's check YouTube first. QCOM, Swanson. That I don't like. In fact, I've already got this drawn up for somebody, and you got that fight there at that 167 level, and it doesn't seem to me like the Bulls are winning. Again, I want people to kind of look. Hashtag not financial advice. You do your own investing, but like me, tech, and me, I'm hanging out. I'm waiting. I don't need to chase tech. I want to see some big, deep discounts. I mean, let's just look at the last discount on from the all-time high as it was back in 2022 down to here, a 46% haircut on Qualcomm before. Chip makers especially go through some pretty big haircuts, and now we're only at 33%. You know, what about in 2014? Nothing really going on market-wise there. You had a haircut of 48%. And so, yeah, it's just you're going to get big drawdowns in tech. I'm still like kind of want to be in Intel, but it's doing that thing where it just won't get off of its lows. But these chip makers, they have these multi-year development cycles. Smarter people than me have explained this to me. So give it a little more time in tech. Just let this cycle of tech play out. It's been going up for 2 years. Yes, we're getting discounts on it, but just let people interested in tech sort of get not interested, and then you have the right price, I think. Okay. So yeah, so gold. I mean, what can I say about gold? Peter Schiff is happy as a clam. I mean, it's going up, new all-time high. Is it all-time high? Yeah, it's all-time high. Yeah. I mean, if you want to jump in, be my guest. But I play pullbacks, so I won't be jumping in. I don't think the world's going to end. I don't think ever at any point in the history when people have been buying gold because the world was going to end, they have been correct. They just happened to have bought gold and gold has gone up. Therefore, it's been a good thing to believe that the world is going to end. So you hold your gold and it goes up. But I don't feel the need to particularly own gold at this point. At any point when I see a chart like this, I wait for a pullback. And that's just me. That's just me. Okay, so how, Coffee Guru? I know you come with some good stuff, Coffee Guru. Well, is this Halliburton? It's not Hindustan Aeronautics, I hope. Halliburton. Okay, all right, yep. It is. I mean, that's a support. What can I say? I try to structure a good trade, man. That's anytime you bring me one, I put it on the list to look at. So no, I'm not going to get politics into this. It's at a good level. It's a good level. Okay, let's talk about the coin of Bit. So it is at the support, and that is where it's hanging out. And despite the fact that this is what the 30-minute chart looks like for these past couple of days, there's been some Twitter excitement about a whale short. So let me give a quick recap on this one because I thought this was kind of interesting. Where is it? Let me find where it started. Okay. So I became aware of this because there was a little bit of drama about this short. Here's the kind of tweet that got me interested. So there's a guy that took out this $300 million short. That's what was reported on Twitter. But it wasn't really $300 million. What the guy did was he did a 40x leveraged short on. Let's see. It was what was the see if I can find the actual what was the exchange this thing was on? What was it? Do you remember what exchange it was on? Anyway, it's a distributed exchange. That means it's public. Everyone can see what the trades are. Which when I first saw this, I thought, like, why would someone take such a public trade to draw in this kind of brigade where everyone was trying to buy Bitcoin to liquidate his short? You can see where his liquidation point was. His liquidation point was somewhere around, I believe it was 85 200. And so this little bit of drama right in here was where apparently people were trying to liquidate him, but they couldn't. So this was on the 16th. And of course, the next day, people were trying to get him liquidated on March the 17th. And you go through this right here, and it's a bunch of people coming through and like, yeah, sell that. I'm going to have $150. I bought $22. I bought $75. It's kind of like a GME type of thing that was going on. And but when I'm looking at this, I'm like, what the hell is this? Let's all give it our best. This just looks very astroturfed and fake. But also, I guess in a lot of this stuff, it was GME. It was people were trying to GME this thing. And you know what? The takeaway of this was, it didn't work. The guy actually ended up closing his short, making $9 million in profit. $9 million. Woo, that's a lot of money. That's a lot of money for anybody. Except when you think about the fact that he risked $13 million. So if originally he risked about $8 million originally for times 40x leverage, and then when it got close to his stop, his liquidation point, he added $5 more million in capital to bring it up to $13 million of risk, making it the $525 million short. And then he closed it somewhere around 83K later on, that Thursday. Yeah, what was that? March the 18th. So yeah, that was actually, well, that was Tuesday. It was early in the week. Yeah, and made that much of profit. But real traders look at that and they see, okay, yeah, that was stupid. Risking 13 million, actually doubling down on your risk when it goes against you. Yeah, you're not going to have that much money for long. And so when I saw this, the thing I thought was, okay, somebody's probably got a long position, and this really seemed kind of fake. Like they were trying to get people to buy Bitcoin. They were memeing to get people to buy Bitcoin to liquidate this short when the guy probably had a long position on. And he was hoping to create a cascade to get Bitcoin off of this level. Now, I'm just painting a conspiracy theory. We'll never know the truth, but I think that's more likely the answer than you had someone that was just an absolute retard with that much money. It's possible, but it looked to me that this was just the meme of this week. And you got people to buy $20 worth, $70 worth. What does that say about people's perspective of crypto right now? Are they out of money? Are they finally listening to the advice, don't risk more than you're willing to lose? It's a lot different. It's a lot different kind of risk appetite than we've seen in, well, let's just say the last 18 months to 2 years. So take that for what it's worth. Very interesting little thing that happened this week. All right. What do you guys think it says about that? What do you think it says when people are trying to brigade and the most they can throw at it and brag about is that they threw $20 at Bitcoin? When people are just like, I'm going to throw $20 at Bitcoin right now. Like I've got this mission and I'm going to throw $20 at it. Like, what does that tell you about the perspective of it at this point? Doesn't matter. What matters is it has a support at 79,285 and it needs to come off of it or else we're going to enter a deeper pullback. I still think it's about 50-50. 50-50 is either 2021 and we hang out like we're doing, which is what I expected it to do when it hit this level because it doesn't do its bear thing all at once. 50-50 that it goes and we actually go up, make a new high, maybe a little bit of moderately higher high, and then the bear trend starts because it will. It has 4 or 5 times before, or this was the start of the bear trend itself. You know what's interesting to me? If we go and do I have my... Let me look real quick. I did a little thing. I was talking to a buddy of mine today about crypto. And yeah, so I had the AI generate me a year-to-date performances of all the cryptos. And of course, Ripple has been on there. And if you want to buy Ripple, that's fine. But here's just a quick list of the major cryptos. Tether's on there because it's just massive. But yeah, this is the year-to-date performance for all the things. Oh wow, Ethereum's back up 5%. That's pretty cool. One of the things that sticks out on here is, if you guys have watched this, is one of my favorites. And just looking at this, looking at the market cap, the lowest market cap thing that still has really good results is Monero. And I don't want anyone to notice that, because something having a lower market cap means that it could appreciate much faster. And I don't want Monero to appreciate faster. I want Monero to continue to be slow and steady appreciation, being used as a currency, which is its use case, and be a nice little store of value in the process, as it has been. But year to date, Ripple, what is Ripple doing? Oh, not Bitcoin. Yeah, hanging out, looking kind of the same. Ethereum has a comeback. Wait a minute. Now I question my data, because Ethereum is not up 5% year to date. Okay, that chart was wrong. AI hallucinated it. I needed to go back and do those numbers myself. Let's do it real quick. Info line, January. That's what happens when you trust AI. Ethereum down 41%. Oh, I saw a really funny meme this week. Hang on. I'll just tell you. It's egg prices, by the way, are down, or excuse me, they're down 40% from their high, actually, from earlier this year. Egg prices, that big thing people were talking about. And if you bought eggs, you would still be better off than if you bought Ethereum. Oops. So let's see. DJ REIT. Oh, we'll do that in a second. Bitcoin year to date. Down 10. Solana. Kind of interested in getting Solana, but not yet. 34% down. Ripple. Probably up. Up to 3%. And Monero. Yeah. I told people today it's up 10%. Whatever you do, don't do a year-to-date study on major cryptos. Just don't do it. I don't want people to notice what I've been trying to say for years, which is that Monero has a use case, and it slowly appreciates. I don't want retards in regulation getting into Monero. It's not my Monero, but it's everyone's Monero. But I want them to stay away. I want all the Moonies to stay away and not come in here and try to pump it. Every time I see it on Reddit, people are like, "Oh, when's Monero going to pump, bro?" It's like, you don't want that. You think you do, but you don't, because then you draw attention to it. And the whole point's privacy. People are using it as a currency. If it goes up, nobody's going to spend it. Same problem Bitcoin has. We want to keep away from all this stuff that Bitcoin has going on. That being said, it's up 10%, delisted from all the European exchanges, and it doesn't have an ETF or Ponzi schemes dumping money into it. Man, like, Bitcoin's got all that going for it, and it's still down 10% year to date. While this one, which is just kind of plucking along, don't take notice of these things, because I don't want people buying it and pumping up the price too much and drawing attention to it. I really don't. It's got a very low market cap, which is like $4 billion. That could move very, very easily, and that's not good. I don't want to see this thing moon, because then people are going to be like, and it's going to introduce volatility, and no one's going to use it as a currency more. It's going to lose its use case. I'm being halfway sarcastic. I mean, I'm serious, but I'm also being sarcastic. But I want you guys to know about it. All right, DJ REIT. What is the DJ REIT? DJ REIT. You got a symbol for me, D? Give me a symbol that I can punch in. So, all right. Well, if you got symbols, NVTS. Semiconductors. Again, kind of goes back in that whole tech thing. This looks like something you buy because you think you read a rumor about it. $2.32. Not my bag, baby. But I would say good look at it. Good luck for it. What I would look for is it to do, get above. Well, yeah, get you a little break. This is not my style. I want to see something with like lots of past price action and do that. That reminds me of something. I think I made a post about this. Reddit, like Reddit is something that I want to short. I do, because this is one that has broken into the valley of risk. That's that 139.77 came back and boom. You see that hit and hold? That is not something that you want to be in. And I do kind of want to start looking at a way to get out of this. I was thinking about this, and the valley of risk takes quite a while to get down, and so like doing puts may not be that great. Might even short the shares. We'll see. I haven't made a decision on this one, but yeah. Oh, REIT Dow Jones, yeah. Where can you buy XMR? Well, there's been some interesting things that have gone on. So I would say the best way to do get XMR is going to be through a distributed exchange. And what that means is you may have to come into that exchange with some USD Tether. The one that I would recommend, and I did a video on it a couple of months ago, is BISC. And so that is a distributed exchange. It's based in Bitcoin. And so I think to enter it, it's like a turtle bisque, or clam bisque or whatever. It's like the food bisque. And look that up, and it has, of course, its native token. I'm really kind of, a boomer and have a hard time understanding a lot of these, like the governance tokens and stuff like that. But basically, to get into that, you're going to need Bitcoin or possibly USDT. You put it onto the BISC network, and then you can get Monero that way. Most of in the United States, the Coinbase, by the way, has never let you buy Monero. It's never been. It's Coinbase, the biggest one, and Robinhood again, the biggest crypto normie exchanges in the United States have nothing to do with Monero, and yet it's still going up because you can't trace it. And they are far more concerned about regulation. And so because they can't report your purchases to the government, they've just decided they're never going to carry it. So you can't do that. But Kraken is a U.S.-based exchange, which you still need KYC, know your customer. You still got to tell them who you are. And so that's going to be an option as well for Monero. And then there's actually a new one that I can't vouch for yet because, again, I'm trying to understand this stuff that the kids are doing today. So this is another distributed exchange that is apparently based on Monero. In other words, it's going to be a totally private, just like Monero, distributed exchange, but I've never heard of it before, and there's a long storied history of rug pulls and the such. So read up on this. I actually asked Grok to explain this to me like I was a high schooler. Basically, it uses multi-sigs in Monero to do these kind of, I guess, it's not smart contracts, but I guess on the distributed exchange itself, it is creating these multi-sig contracts. And it's private. And so this is probably the work in progress now for doing another distributed exchange, except this one's going to be based on Monero itself. Can't vouch for it yet because, again, like all things, I'm always afraid of a rug pull. But these two are how to do it. If you're Euro, you're going to have to do a little more research. BISC is going to be the way to do it. Yeah, that will be your distributed exchange that you use. And that's been around for a very long time. Very, very well established. But still not private. Like the Serai is reported to be. So we'll put that as the other one. So just to kind of recap, Kraken in the U.S. is KYC. Again, this is not. I'm not gonna say you're gonna buy a Lamborghini with Monero. Please don't get into it for that reason. But but you got to pay it. You got to give it some respect. People actually use it as a currency. It's holding and appreciating in value when everything else is just in the gutter. And it doesn't have ETFs for it. It doesn't have the social media memes. It's just people want it to use it. That's it. Wow. Imagine that. So, all right. What else we got? We got some more stuff to look at here. Yeah, let's look at the REIT. And then anything else, guys? Oh, we got Robinhood. Well, let's look at the REIT real quick. REIT. Looks like it's good. It held the 50% here at about 2,500. Real estate, I don't really have an opinion on real estate because I can't make one right now. I want to always be a buyer when there's question, when there's doubt, when there's fear, blood in the streets, and that kind of stuff. But what I find kind of just anecdotally about real estate right now is that both commercial and residential, nobody wants to lower their price. And inventory, what is I wonder if TradingView do we have residential inventory? Existing home sale inventory. So it looks like there was more last year. That doesn't really tell me anything. I think real estate, we need to kind of wait and see if we get some kind of a big move in there. It's just a little too questionable right now. Again, I like to buy things people have questions on, but I don't have enough of a read right now on real estate to make an opinion about it. And so yeah. But as far as that particular one, REIT on a weekly, it's going up. It's trying to get to the high. I don't really see a particular pullback either way. All right, so Robinhood. I have respect for Robinhood. Nope, that's not it. Hood, sorry. Woof. Yeah. Again, tech stock. A lot of Robinhood's revenue is going to be. Oh, look at that. Last week was a great time to buy it. Oh, yeah. 37.41. I've just been kind of sleeping on Robinhood. I like the fact that they have some of the lowest margin rates. But, yeah, 37.41. You trimmed Hood at 50s. That's good. That's pretty good. But you got if you're going to trim it, you got to look for a pullback. And there's your level. And there's a great example of 50% working. You got a 50% all the way back from November of 2023, where this big rally started, up to the high, 37.41. You've even got some price action right there. So yeah, little coming a little bit late right now, but there's your level. It's coming off of it. You probably end up maybe getting a little pullback to here and see if you can get a launch up. That's good, because you know where you're wrong. Again, it's all about being able to. It's not about knowing the future. It's about being able to manage your risk and know, okay, here's what I need to get out of it, and that's when it gives up its major support. And you can definitely structure a trade around that. Like for instance, if it pulled back to something like that, maybe 40, just throw it out there with a low there. There, pull 3 to 1. That's what you want. And then now you can own the shares for it to go on and do wonderful, dreamy things. But I want to get on base, kind of like a baseball player. And like this is what I would consider to be like, first base, or even maybe a third, second, maybe a double, is to try to get back up to that high. And then you can sit in there and wait for a home run. That's the kind of idea behind catching these things on 50% pullbacks. Kind of like Amazon. Like I said, had a big 50% pullback in 2023. You get in it and you ride it, maybe take a little profit here at the high, and then now you sit in it and you wait for people to keep on using Amazon for the next decade, which of course they will, and on and on it goes. And that's the idea. That's what I like to do. All right, let's see. BRBR, Bell Ring Brands. Again, up and up it goes. I would want to see a pretty deep pullback on this. It's just bullish. You know, I would probably start it back here. I don't think you really want it to come back that far if you're in it now, but that would be what I would look for. There's a sort of interim 50%, maybe from here to here. Oh, it hit it. Look at that. You got some good things there. I hope that by asking this L page, that you are that you're in these already. But yeah, it looks like over the last few weeks, like when we had that big dip in the market 2 weeks ago when it really dipped, you hit some really good supports on those things you're calling out. DFS, Discover Financial. Oh, somebody watches my videos. Look at this. It's good stuff. Did it hit? It just missed. You might get it. 142.40. Yeah, these are good. These are good, healthy pullbacks to supports. I like these. I like these a lot. I've just been sleeping on Robinhood. I kind of want it, but I do stuff with other brokerages, even though the main reason is just kind of inertia. I already have my money in other brokerages, but Robinhood actually has the best margin rates. But I'll tell you this right now. I don't have any stocks on margin, by the way. At the beginning, about around January, February to start the year, I had some stuff on margin, and as the market just refused to kind of really rally, push harder, I was like, let's get some cash, or at margin at least. And so I don't have any stocks or anything held on margin right now. That's what I did at the very beginning of the year, was I kind of trimmed everything down, all my positions, to where I wasn't using any margin, which, you know, the margin rates on things like Schwab, the biggest one, which owns everything, they have like 11, 12% margin rates. And so what that means is if you have $1,000 of stocks, you can then, or $1,000 of capital, you can then borrow 50% more than your capital. And so you can go borrow $500 and then go buy more stocks for $500. But you're getting charged 12% APR on that $500. And so you better make more than 12% just to break even. A lot of people don't realize that. A lot of people don't realize that when they trade on margin. Brokerages love for you to not notice that. They don't care if you win or lose. They're making that interest money. But Robinhood has it around like 5-6%. I haven't looked at it in a few weeks, but Fed rates haven't changed. About half. And that's still a big thing that you have to overcome, 5-6%. But that's a lot better. Schwab is killing people with margin rates. And so I really like what Robinhood is doing in that sense. Yeah. So I like it. All right. You can't use it probably because you're out of the country maybe. Bitcoin dominance. Again, I always ask the question. How do I trade Bitcoin dominance? How do I make money on Bitcoin dominance? Please, I mean, it's a serious question. I'm not sure. I think a lot of people look at this because they're like, oh, when's alt? Oh, okay. Well, can't help you there with rules. I mean, probably has. I mean, it's for a good reason. I mean, you don't want to be accused of anything. There's plenty of ways for you to make money. But it's just, if you're going to trade on margin, it's obviously Robinhood's better. I mean, I think they do that to try to attract customers, and I have to say I'm attracted as someone that pays attention to that, and so it's good. I think they probably want to attract more higher value customers. I don't know what their customer base looks like. I think maybe there's the impression that they are have less money because they kind of came about back during the the 2000 or the 2020 stimulus check era. So, well, that's the key word, working on. I mean, I use TradingView. TradingView still is the is the best thing out there for charting. But I mean, even if they did, I would probably just integrate it with TradingView. So that doesn't matter to me much anymore. It used to matter a lot. But yeah, I mean, it's fine. I don't have a good reason not to use Robinhood now. So actually, the reason I don't like Robinhood is because it can't set up multiple accounts. I have one account on Robinhood, which was my STEMI check that I put in 2020. It's almost doubled because I didn't do crazy stuff with it. I didn't do any options. I just bought stuff like Costco, Tesla, I think some tech company, something like that, or no, excuse me, energy company. And I've just been kind of just, let me show people what happens when you invest a STEMI check. And so it's almost doubled in 5 years. I think it's like 80% with this pullback. But yeah, I just kind of leave it there. It's just kind of like, hey, look at that. But I would have to clear that out and then put money into it and to use it for anything else. And I just haven't done that. And they won't let me open a second account because it's all app-based. So that's a big limitation that they have, that they won't let customers open more than one account. That's just because I have multiple accounts with Tastyworks. I have multiple accounts with Thinkorswim, which is now Schwab. And they let you open up plenty of accounts. But Bitcoin dominance, I just overall, I mean, you're not going to get an alt season unless Bitcoin's going. I think that alt season was sort of something that people really got into back in 2018. I mean, that was, I mean, really when people talk about alt season, because they were like, oh, when's the next alt season? There's only been one really. And that's well, there's two, but this doesn't cover it. Well, it does. Actually, it doesn't. This one doesn't cover it because the last alt season, when like Litecoin and Monero and others came about. When did Ethereum come out? Did it come out in 2013? I think it. Or when was it? No, it wasn't that. Yeah. Okay. So it came out in 2000. Hold on. What's the all-time index? Yeah, so really the first alt season, I think, happened back in, okay, so Ethereum started in 2015. Monero started back in, yeah, this was the real first alt season, was like 2013, 2014, okay? But, that doesn't really show up on the chart because, Bitcoin was still, everything because it's market cap. But the other alt season was, of course, the 2018 to here. And so when people think about alt season, they're like, oh, yeah, we're going to get another alt season. And they act like it's just some, given as far as, wait. No, I'm reading this wrong. Sorry, I'm wrong. This is the alt season because, yeah, the Bitcoin dominance dropped. Okay. And then you had an alt season here in 2021. Okay, right. There you go. Okay, so you've had two alt seasons. And so people are looking at, okay, I want my crypto that has like a 0.000000 price to go to 1 cent. That's what people are looking at with this typically. And I just don't know if it's had enough times of happening for it to be guaranteed. That's all I'm saying. So I don't know how to trade the dominance. I don't know where the resistances are. They're going to tell you when alt season are going to begin. I think you got to look at stuff based on the fact that there's risk appetite in the market, which is what the case was in 2021. Everything was risk on. And everything right now is being dictated by Bitcoin, except Monero. So, all right. Well, thanks for hanging out, guys. It is 5 p.m., and so I'm going to go enjoy my weekend. I want you guys to. Remember, when it comes to crypto versus the stock market, the market closing is a feature, not a bug. So get some rest. Get back next week with some good sleep fresh because volatility is still high and there's lots of opportunity. And we'll see you next week. So trade wisely.